What's up, everyone? In this video, we're going to jam-pack a lot of information on Bitcoin, stock indices, and how to trade it all. Most importantly, I want to urge you not to waste your money right now on frivolous nonsense. Why? Because you're going to have an opportunity of a lifetime, at least once every decade. You have these opportunities to scoop up assets that are worth a lot more for pennies on a dollar. Not pennies, but at a very, very large discount as to the price they're going to be trading in 2 to 5 years. Now, if you're going to be wasting money, you're not going to have enough cash to deploy it. You're literally going to stay where you are. But this is an opportunity which presents itself very rarely, and you should take it seriously. So instead of buying new iPhones, put that $1,500 to use into other assets. Now, let's take a look, and I'm going to show you which assets we can take advantage of, where Bitcoin, where stock indices, where US dollar and rates are going, and how to trade them short term and invest into them long term. Let's jump in. So let's take a look at Bitcoin short term, longer term view. We're also going to take a look at indices, stock indices, and how the previous market crash 2001, 2008 can help us to determine where we are right now in our current situation with the stock indices and every other instrument, honestly. So with the biggest one, let's start with Bitcoin because that's what was moving this weekend. So briefly, this red line here. This red line here is 2017 high, as displayed on the weekly, as you can see. And we were hovering about above 20,000 for a few days last week. And then on Saturday at 2 a.m., we blasted through the support. As always, those weekend shenanigans, meaning low liquidity time where you need to deploy much less capital to push the price your way to force liquidations. And that's exactly what happened. And that's why we're going to take a look at how you can profit from similar situations in the future. We just had a Inner Circle webinar basically discussing that, and I'm going to share a few tidbits from that webinar. And first of all, I was this is the right. So this is the what I wrote at 5 p.m. on June 18th, so yesterday, and at 5 p.m. And that I would be playing counter trend move on a 50-minute if basically the sell-off pauses and starts going back up. I would wait for a moving average crossover to trade this counter trend, and actually played out pretty well. By the way, if you're interested in the Inner Circle and actually trading with a bunch of people who know what they're doing, more than welcome to stop by apexbull.com and check out the Inner Circle package. In any case, so this is the 20,000 we break down. We were basically selling off, and when we were somewhere here around 5 p.m., so somewhere here, right, so once we got this bar right here, I basically said, wait, watch for a bounce up, and I would trade it with the moving average crossover, which is a late technique, but still works. So we were at 501, so this is a 7, so this is 5, 505, 510. So somewhere when we were here, basically said we were bottoming out, and I would just deploy a moving average crossover to trade counter trend. And I explained in the V formation to our Inner Circle members why it went exactly here. Gave past examples, but here I'll just briefly mention how you can do it as well on your own. So this was the bottoming process. I basically expected that because we ran the stops and forced liquidations, we at some point will be taking profit. By we I mean smart money will be taking profit, and we can catch the counter trend move. And the counter trend move was even if you didn't even buy it here and bought this simple moving average which was a late signal, you still profited handsomely, and I'll show you how. So this is this candle right here, and this is when the moving average crossover happens, as you can see by this plus sign, right? So you would once you get the signal on the open of next candle, you're gonna go long, and this is the bottom of the swing where you should place your stops. So for good measure, I'm just gonna give it some room like this. And you target 1-to-1 as a counter trend, since this is a scalp. And lo and behold, you go long here. It goes against you a little bit, but look how targeted move. It targets exactly the breakdown point, this red line, the 2017 high. And that's exactly what happened. We tagged it several times, and now we're just consolidating below to find the next move. I think the next move is still going to be higher, because we basically flushed out. I don't think that this is the bottom, but I think that there's a high chance of us retracing now to the top side, because there are many signs. First of all, we have multiple divergences here, as you can see. Let me make this a different color. The momentum divergence, and here you see this valley here and valley here, right? This momentum is basically telling me that this is coming to some kind of temporary end. And so retesting maybe these highs here around 23,000 is easy peasy, to be quite honest. So there's definitely more room to go to the top side before we start rolling over and resuming the downtrend. As it's pretty obvious, we're pretty oversold, and I think a relief kind of trend rally or some kind of pullback is going to happen. And usually it happens around the wave of previous wave 4, and if this is a 1, 2, 3, 4, 5, this is the previous congestion wave 4, and that's exactly what we're targeting, 23,000. So there's definitely room for short-term traders to take advantage of that move. I don't think this was a capitulation flush out just yet, but let's see how this weekly candle closes as well later today in less than 8 hours. Because if we, like I said, there is high probability that since we've probed it, we ran stops below 20,000, we liquidated some traders. So we might have a sideways consolidation, a little bit of a pullback before we resume the downtrend to perhaps 14,000 or so, 13, 14,000, maybe 10K. Because I don't think the maximum pain has reached the levels yet. And I also was showing how previous corrections, if you go into the, let me remove this. So, and this was log. I wasn't long, geez. All right, so this was 2017. So if you measure 2017 from peak to trough to its lowest point, we went down 85% to here, right? Now, if we do the same analysis from this peak to now to the lowest point here, we went 74. So 84%, 85% comes in around 10,000. So somewhere between 11, so somewhere between 10 and 13, 14,000 is where I would expect this whole situation to end. Also in 80% range, above 80%. And why 80% is the target? Because if you go long enough in the Bitcoin history, you're going to see that every single one of those corrections was about 80%. So somewhere between 80 to 85% lost its value before. So from 2011, 2013, 14, etc., etc. So, but I just want to briefly show you same thing happened in 2017. You can look back as well, and you can duplicate and see what I'm talking about, those results. So that's Bitcoin, and With Bitcoin, I think maybe taking a pause right now also is due to the fact that this weekly 10-year yield posted a very a reversal candle, to be honest, quite honest. There we go. So this is a nasty reversal candle. So we basically tried to go up, we didn't go up, back up, and we're trying to roll over. And if we take out the lows of this candle in the next week when we open, well, this week already, Sunday, when we reopen, we will, if we start rolling over, I think it's going to further put pressure on the US dollar and help out indices and Bitcoin, meaning risk assets, to go up as they move in inverted correlation to the bond yields. So that's basically the reason why Bitcoin has ability to go to mid-20s for as a relief type of rally trade. Let's take a look at NASDAQ and how other 2008, 2001 crashes occurred in and what we can learn from those times to now. So first of all, it's not only 2001 and 2008. Both even in 1929 and 1930, there was a similar situation. We basically had a sell-off, then we had a huge bear market rally, which was the trap. It suckered in a lot of traders thinking, oh, this was over. And that's when the big crash happened. And let's take a look how it occurred in 2008. In 2008, we approached it to this is Dow Jones, but let's go to NASDAQ, as it has more stocks representative of, but similar situation, doesn't matter. So as you can see, in 2008, we had a sell-off into the 200 moving average, simple moving average, weekly. On a weekly, it provided support, as moving averages often do, being a dynamic support resistance. So we had a bounce in 2008, and everybody thought, oh, this was it, and this was the trap before the afterwards Lehman collapsed, and that's when it started the real cascading effect. Similar thing happened in 2000. Well, this thing doesn't go far enough. Let's go NDX. So this is 2008, as you can see, bounce down, and then 2001. So even in 2001, there was a 2 or 3 week rally off of 200-day moving average, and that's where we are right now, essentially. As you can see, we've also approached it. We got really close on the COVID sell-off in March 2020, and that's where we are right now. So basically, I think we're gonna tag this line, do a bear market rally to sucker in people, and after that, that's when the real sell-off will occur, because we're obviously getting multiple divergences as well here, meaning that just like with Bitcoin, this is getting very oversold temporarily, and a relief rally will follow through in NASDAQ, S&P 500, stock indices. So with stocks rallying and Bitcoin being positively correlated, meaning they move in tandem with the NASDAQ and other stock indices, I think both Bitcoin and stock indices have some room to go upwards before they resume the sell-off. And you can trade that move up. Just understand that it's probably a trap, and don't stay there too long. And once it starts rolling over, you need to get out and get short. So that's briefly on the stock indices and what to expect this week. Hopefully, I think Powell is testifying in front of Congress this week as well. So we'll see what happens there. He'll obviously jawbone the markets, etc., etc. So hope it helps. As always, check out apexbull.com. And if you like this content, please like, subscribe, as it the algorithm picks it up and disseminates it to other people as well, so which might find it useful. So we appreciate your support. You're more than welcome to stop by. Free Telegram group, link is in the description, where we discuss all of this 24/7. Hope it helps. Enjoy.